I'm sure when we think about owning a home or buying our first home, our entire emotion is attached to how will we settle in that home, how would it make us feel. It's all about these positive emotions. But to get to that dream home, more often than not, all of us require home loan to at least put in large chunk of this money which is required to own that beautiful home. And it's not a surprise for many people who have tried this in the past that when they go and apply for a home loan, they realize that my CIBIL score, which is a slang used for their credit score affecting the amount of loan which they can get, the interest rate which they can get, and in some cases even the eligibility, that they may not be eligible for a home loan at all. Now this is where your awareness and understanding of credit score becomes extremely important. Though most of us know that we should walk every day in the morning to be healthy, none of us do it. But when you go through this entire video, you will understand the importance of consistently checking your own credit score in order to know if there is anything which is well within your control to improve your credit score. So if and when the time comes to get your home loan or any other format of big ticket loans, you get the best deal possible and allows you to save money. But guess what? Does that mean that if I have a poor credit score, I should delay my decision of buying that home? No. You should reach out to us who at Peaceful Loan are experts at finding you the best interest rate possible for your current credit score. And of course, once you go on with that loan a few years down the line, you also have an opportunity to change that loan from a bank A to bank B, so that over the longer tenure of this home loan, you get the best average deal possible for that circumstance. This is Mangesh Sope here from Peaceful Loan, and we have helped tons of such customers. Based on that experience, I'll walk you through examples, real life examples in terms of what was holding back the credit score of some of these clients. Now that we have heard so much about this credit score, let's try and, in layman's language, try and understand what this is. This is very similar to how you used to get your 10 standard marks or 12 standard marks. It's an aggregation of multiple subjects which you have taken and how you've done on those subjects. The only thing is the scale over there was either on a GPA of 10 or 100% marks, whether you got 60%, 70%. It affected how you got through, which university, which college you got through based on these marks. Higher marks means higher ability to get through better university. That's exactly how the credit score also functions. But credit score ranges from 300 to 900. It's a 3-digit number. Of course, higher the number, better is the credit score. That means you will get better interest rate, better loan sanction terms, better sanction limit. Everything will be better with higher credit score if all other factors were to remain same. If you want to understand the broad classification of what's a great credit score to a bad credit score, you can look at this table on the right hand side to get a sense of what is a good credit score and what is a bad credit score. Always keep an eye on the score so that you can nudge and correct some of these things to keep improving the score. Just now I told you, credit score is similar to how your 10th standard marks are aggregation of different subjects, right? Now, what are these subjects as far as a credit score is concerned? First and foremost, which is the highest weightage, is your history of repayment. That means if you have paid EMIs or your credit card bills on time, this one has approximately 35% of the weightage, though this weightage nobody's clearly put out there, but broad understanding is that this is the most important of the parameters. So avoid delaying any payments as far as your loans are concerned, be it your credit card, be it your EMI or any of those things. Now the second subject is credit utilization. It's very counterintuitive, but if a bank gives you 1 crore rupee of loan sanction limit, this rule states that you should utilize only 30% of the lower sanction limit given to you. That essentially means that you should use only 30 lakh and below. And I'm sure at this point of time, anybody who's on this channel watching this video with the context of getting a home loan would say, where would I bring in the rest of the money from to buy this home? So more often than not, big ticket items like home loan, etc., though they will affect credit score, but because you're not doing them back to back, you're not buying 2 homes back to back in 3 months, 4 months distance, what you've done before buying that home becomes very critical. And more often than not, all of these loans are small ticket size like credit card usage or a personal loan usage or some small ticket loans like this. Credit card being the most frequently used out of them. So you should keep your credit utilization under 30% for your credit card to have a great credit score. And if you consistently use credit card for expenses which are regular expenses, I would advise you to get more than one credit card so that your overall usage per credit card is under 30%. This is a pro tip which has helped a lot of our customers to ensure they have a healthy credit score when they apply for a big ticket loan like home loan. The third subject is length of the credit history. Now this is an indication to a bank that this person has been taking loans in whichever format for a long enough duration, and as per the first fact of repayment, he's been paying on time. Longer this tenure of your credit history, it's better for banks to take a bet on you and to trust you as far as lending to you is concerned. Hence, any loan which you have taken, which is the first loan which you have taken in your life, ideally that loan being there in your entire credit history helps you in getting better score. This ideally has about 15% of weightage in the entire credit score ecosystem. A pro tip here is many a times out of frustration or out of listening to some YouTube influencer or some Instagram influencer, you say that I don't want to use credit card from today, and you will discontinue your oldest credit card. Not only are you discontinuing your credit card, you are also letting go of all the history associated with this credit. And hence, we would strongly recommend for you to not discontinue your oldest credit card. Now, fourth subject in the credit ecosystem or the mix of credit score, how it is arrived, is what type of mixture is your credit put together. Are you specially taking only credit card loans, or you're taking personal loans which are unsecured, or you've taken a car loan, or you've in the past taken some commercial loan or some home loan and you've paid all of this in time. The more variety you have, the better it is from the new bank which is thinking of lending to you. Having substantial credit history only dependent on unsecured loans like credit card, personal loan may sometimes not be the greatest indicator for a bank which is trying to give you a secured loan like a home loan. And hence the credit mix is also equally important. It has about 10 odd percentage of weightage in your entire credit score as far as our research across online platforms goes. As I already indicated in the beginning, these percentages are very indicative in nature and they are not exact. So none of us know exactly what percentage it is, but to ensure all the factors are in check is very, very important. Fifth and the last factor which affects is new credit inquiries. What does this mean? Every single time I've spoken to a customer and requested them to apply at 2 or 3 financial institutions for any loan so that you have competing offers, one thing these customers have always come back and asked me that, Mangesh, doesn't this, every time I apply for a loan, does it not reduce my credit score? Or they generally call it as CIBIL score, like how we call a bottle of water Bisleri. But though it is true that every time you apply the credit score reduces, this only happens if a financial institution checks your credit score with an intent to give you a loan. This is called as hard inquiry. And you can see this in your credit report as the number of inquiries on your name. Sometimes you will be surprised to check that some of these inquiries you've not even applied for. And these are the things which, if you report to the credit bureau, you will be able to improve your credit score. This factor approximately also has 10% weightage. So, though because of some form of awareness around this, everybody is conscious of this, if you look at it, this is probably one of the smallest factor which affects your credit score in total. So be conscious of all these 5 factors to ensure that you have an ideal credit score before applying for a large ticket size loan like home loans. Now, we've had multiple conversations where a customer, when we ask them what their credit score is, they will send us screenshots from a variety of applications. Some of them will say CIBIL score of 710. Some will say Experian score of 738. So on and so forth. Many times our consumers have sent us their credit score from 2 different applications having different numbers. And some smart customers have also done this when the bank has come back and said that this customer we cannot give that added advantage of high CIBIL score or a high credit score. They will show us a screenshot of one particular type of credit score, be it Experian, CRIF, Equifax. But what is more important to understand is all these 4 are different credit bureaus approved by Reserve Bank of India. All of them are applicable in terms of any lender choosing any one of them to evaluate your credit history. But one particular lender cannot use 2 different type of scores for standardization purpose. Hence, most of the lenders will choose only one of these 4 available credit bureaus in terms of evaluating your credit history. Because we've been doing this day in, day out, we generally know which lenders using which of the credit bureau to evaluate your credit history, which allows us to navigate this situation to get you the best possible interest rate and all other loan terms for your specific needs. And if you want to optimize your home loan, then you would need guidance of an expert when it comes to these credit bureaus. Now comes the question of why is one credit bureau giving me a different number versus another credit bureau giving me a different number. This is like doing your blood test from 2 different labs. The numbers will slightly vary, but both are a good enough indicator to a doctor in terms of how you're doing health-wise. More often than not, we have seen that lenders use CIBIL as a common credit bureau across the board, and that's why you see the credit bureau, large number of people don't even call it credit score, they call it CIBIL score only because of the common usage of this brand's credit bureau score very frequently. Though credit report is a very, very important matrix in terms of whether you get a good deal versus a bad deal at that point of time when you're trying to look for a home loan, are all credit reports accurate? To be honest, you'll be surprised to know globally 1 out of 4 credit reports have some issue or the other. That means there's about 25% chance that you have something wrong in your credit report, which will stop you from accessing the best deal possible in your case. Now you may ask, how would you fix that, right? One is to have a consistent habit of looking at your credit report and trying to understand what is written in that credit report. You will frequently find issues like a loan which is closed, completely paid by you, still showing active. It could be a case that a credit card is there in your credit report which you've never known that you own that credit card, and there's some 120 rupees outstanding on that which is affecting your credit score. Very frequently we come across. You or your family have been co-borrower to some relative friend's loan who has delayed the loan and you're not aware of it. Some loan which you've never taken is marked under your name. There are innumerable such mistakes possible. So we strongly advise that Frequently, you should keep checking your credit report and analyze and understand if there are any of these showing up in your reports which don't belong to you, and report them to credit bureau so that your credit score is fixed and you can enjoy the best possible benefit of being a high credit worthy person. During this video, in parts and pieces, we've discussed this, that how do we improve CIBIL score or a credit score. Nowadays, your credit score is refreshed every 15 days. And especially in cases like home loan, this could be a very big impact in terms of your credit score leading to interest rate. So first and foremost, pay all your bills on time. Pay all your EMIs on time. Second most important is keep your credit card utilization under 30%. Then don't close your credit card or any of the loan which you have taken in the past, which is your first access to credit, which ensures that you have a long tenure of history. And fourth and very important is to check your credit report very regularly and highlight if there are any errors in this to the credit bureau from where you're checking this, in order to ensure that you have a healthy credit score when you go and apply for a home loan which is as large as say 1 crore, 2 crore. You would have seen that I've never mentioned that checking your own credit score reduces or pulls down your CIBIL or reduces your credit score, because it is true. It is called a soft check, and soft check does not reduce your credit score. A lot of consumers who have spoken to us have been wary of this fact that I do not check my credit score because it will reduce my credit score. It is completely a myth and a false communication. You checking your credit score will never reduce your credit score unless a bank checks your credit score. Last, many places you will find this, that do not apply at multiple financial institutions or multiple loans simultaneously because it will reduce your credit score. I agree that it might have certain short-term impact on your credit score, but if you have the right expert to guide you in terms of why you should not apply at 20-30 financial institutions simultaneously for your home loan versus that, how do you strategize and pick only 2-3 financial institutions to apply, so that you can cross-negotiate with these 3 financial institutions and banks to get you the best deal. It's very critical that you choose those 3 beforehand with an expert guidance like Peaceful Loans expert in home loans. Otherwise, you would land up applying at 3 wrong institutions, and then when you come to us, we'll have to apply at another 3 institutions. That means you've had now 6 credit score checks on your one single credit history. That will bring the credit score down, and possible deal which you could have gotten, you would miss out on that. Now that we've understood credit score in some bit of depth, the next set of question which I can almost see coming from you is that, does a good credit score ensure that I'll get a loan? No, answer is not that you will definitely get a loan, because loan has many factors a lender looks at along with your credit score, like your income, your fixed obligation income ratio, and your collateral availability, the total sanction limit they can provide you. It's a very complex maze of multiple parameters coming through to ensure that you get the right specific type of loan. Though it is very, very important to have a great credit score, because it's as good as your first impression to the lender. That means you start on a positive note if you have a great CIBIL score. And we've seen the chart right in the beginning. What is a great CIBIL score or a credit score versus what is a poor credit score? But if you are at a great credit score, you have a different set of financial institutions where you should apply for your loan, versus if you are in the middle or right at the bottom. Be it whichever be the scenario of your credit score right now, it is impossible to change your credit score from say 630, 640 suddenly to 800 within a span of 30 to 45 days, especially when you're looking at getting a home loan. At such point of time, my recommendation to you would be to optimize for your credit score and get the best possible deal for your credit score. Improve your credit score over the next 6 to 8 months, 12 months consistently, and at that point of time, again seek our help and move your home loan to an institution which now gives you the best possible interest rate for your newly found credit score and improved credit score. In our experience, as far as home loans concerned, we've seen 750 and above credit score assumed to be good across most of the financial institutions. But we've seen the best deal, best interest rates are generally available for 825 CIBIL score and above, or a credit score and above, if you want to get the cream de la cream sort of a deal. But as I mentioned, even if you are belonging to middle credit score or a bottom credit score category, don't be worried. Please reach out to us by booking a consultation call on the link given in the description box, or reach out to us on WhatsApp or by directly giving us a call, and we'll be more than happy to help you at that point of time to ensure you get the best outcome. If you've liked our content to ensure that you save a lot of money when taking home loan, please like, subscribe to our channel and share this knowledge-filled content with your friends and family so that they can also save lakhs of rupees on their home loan decision.